All right. So today's lesson is going to be on range trading. Let me just get AVAX up here as well really quickly. And the reason I chose this one is because a lot of people are um, FOMOing when there's a breakout, okay? And they're asking when to get into positions when there is a breakout. So I'll go over a few examples. And a lot of people are, once we're at the highs, so let's say like we broke out of injective over here, people get FOMO here and they start longing all of a sudden for the price action to do this. Okay? So when we do have a breakout, whether it's on Bitcoin, whether it's on any single coin that just runs hard, you want to wait until the range develops. All right? Um, so on injective, for example, and I'm going to show you guys the spot chart because if you're looking at the Binance chart or the Bybit chart, you don't see it. So if you ever want to see, like for example, a new coin that just got listed on an exchange, take a look at the spot chart first. So Binance spot chart. Um, and we see that if we take a look at the spot chart here and we go back on the weekly, we see that the highs for injective, okay, is around 25.33. All right. So you don't see that on the perp chart for Bybit. Okay. And a lot of people, that can mess a lot of people up. So always when you're looking at a coin first pull up the spot chart on Binance Spot. Take a look at that because there are a lot of data that a lot of people are missing. Okay. So a lot of people thought that injective made new all-time highs when it crossed, $10, right? When in fact the all-time high was at 25.25 or whatever it is. Okay, so taking a look at injective, right? We saw that we had a breakout yesterday, and we broke out of. Here's the all-time highs line, right? I'm just gonna label that. Okay. Now, when you have a breakout, especially on a coin that's in price discovery, you want to chart it on low time frames. Okay, and this, if we were to go back, let's go replay. So let's do this. Okay, so we have this high. Once it broke out, this is your range high. I'm gonna mark that with a red. Okay, and then we pulled back. This is our current 5-minute lows. I'm actually going to use price lines really quickly. I'm going to ask whoever sets these up to use stages next time because that would be easier. Okay, so range highs, and this is the first pullback, so here's your range low. Okay, so you have to wait until this range develops. Yes, you can also, draw fibs, and there's your mid-range probably somewhere here. Okay, because we bounced right from it, which is also the top of the candles here. So let's call this mid-range. Okay, and let's make that blue. Right? So we have our range highs, range low, here's the mid-range. Now, when you're trading a range, the riskiest part to trade is the mid-range. Okay, once it breaks out, which we did here, here was the range low, we broke out. The mid-range was marked by this first touch. Okay, so yes, you can play the range from range highs to mid-range over and over again, but typically when you are in the mid-range, you don't want to take many trades because you don't know how price action is going to go. It's usually going to bounce from range lows and reject from range highs until we get a breakout, and that's where you should focus, especially on swings. And I always urge people to have multiple accounts if they're trading, whether it's MEXC or Bybit or whatever, have at least a sub account where you can put your swing trades on one account and not focus on them, and then your scalps on a separate account. Because if you're trying to trade both on the same account, especially the same coins, and you're scalping, a someone's got a hot mic. One sec. Can you guys please mute your mics? Okay. So, when you're trying to scalp and swing the same coin on one exchange, it's going to mess a lot of people up. So again, I always suggest having multiple exchanges so you can diversify one coin versus the other. So once we have the breakout, right, plan your mid-range, your range highs, and your range lows, and that's what you're going to trade. You're going to focus on that. So when we come back to range lows, right, that's where you're going to bid. But now this coin's in price discovery, so it's a little bit different than an actual coin that has data, and we can see candle structure and information here. But when a coin's in price discovery, you'll have to use fibs. Okay, so if I were to draw fibs from, well, when a coin goes into price discovery, I use fib extensions. But if you were trying to draw fibs here, right, especially on a coin that just broke all-time highs, it's a little tricky to play them because it's especially a coin like Injective, it's pretty volatile. Like we saw the price structure here, right? Like this was a 5-minute candle that broke out from 25.16 all the way to 26.9, right? So it's pretty volatile. So I personally am not a fan of fibs. I don't use fibs because everything that I trade has data over here. But when a coin goes into price discovery, I just wait for a range to form and play it that way. I will answer all the questions in just a moment, but first I'm going to go over this, okay? So what you're going to do is you're going to long range lows, and because we flipped this mid-range, or we have this mid-range now, you're going to play this over and over again, right? Short range highs, and then if you want, you can long range lows or mid-range, but you have to use other confluences here as well, right? Because we if you were to short range highs over here, where would your stop be, right? That's where you would use fibs to possibly point that out. But if you were to range or short here, right, and you were to place your stops, let's say above this wick, very, very tight, especially on a 5-minute, it's a very tight stop, right? This would have wicked you out, but this was once we got here, right? So we established mid-range, and you were shorting range highs with your stops above this wick. You would have gotten it on this first touch, and then we did dump. I don't know if we wicked up here first before dumping. Let me check. No, yeah, we wicked high. So if you had shorted here, right, you got a nice 1.5% move down, right? Then if you were to short here again, right, it's a matter of stop placement. If you would have taken the same exact play and maybe your stop was above this wick now, even before this one, you would have gotten stopped out. Very tight, right? But then because mid-range was flipped to support, I'm going to go back on the 5-minute, right? You could have taken a long at mid-range, probably stops below this wick, targeting back range highs. Okay, and there you go. So mid-range stops below the wick. For those that placed their wick below, or their stops below this wick, it was a liquidity raid. So we actually took it out. We did not swing fail. We probably swing failured on a 15-minute, but I placed my stops below this one here. Okay, again, very tight stops, playing the range, and you got range highs for a 2.3R trade. Okay, now again, you could have shorted range highs, right? Again, stop placement. If you have the risk tolerance, this R&R is awful, but this would be it. You go in very small at entry, okay? Stops above there. I wouldn't have placed my stop there. I'd probably go like somewhere in between, okay? And then play this range again, right? So your TP would be at mid-range, and then your full TP would come at range lows, and then You long range lows, probably stops. You know, again, if it's within your risk tolerance, place it below support, so somewhere there, and you just play this over and over again, right? And playing a range, it's going to break down one way or the other, okay? So it might break out. If it does break out, you're going to wait until range highs gets flipped to support, and then you long with stops somewhere here. Based on this, I can't tell you the stop loss, right? But let's say it broke out here, okay? Stops would be somewhere below support here, okay? First TP probably comes once this wick is cleared, and then you move your stop loss to break even, right? So if I were to play this out, right, and just know the more touches of resistance or support, especially in a range, it's going to get weaker and weaker. We've had multiple touches here on the 5-minute, right? There is your range lows. We bounced right from it. Okay, you're going to TP at mid-range. So there's your TP. We rejected right from it, right? You move your stop loss to break even. You can get back into it.
Ooh.
Right? We never got stopped out. Okay, TP1 hit. Stop loss now break even. Here is the flip of the mid-range, right? We broke out, we flipped it to support, and then once that happened on the 5-minute time frame, you got about a 1% move. Okay, whoops. Right, and then again, stopped out, break even. Look, this is already mid-range, or sorry, range lows, already established support. You could have taken the same exact play, right? Got back to range highs, shorted range highs for another percent. What is that? 5% there, 5% there. And you're just playing this range over and over again until it breaks, right? So if you would have taken this one again, you would have been stopped out. Now, here we had a deviation. We reclaimed range lows once that candle closed above, right? It was a reclaim. That's where you would have longed. This is what I was talking about. So here is range highs, right? We were rejecting so many times from it. Multiple rejections. It's going to get weaker and weaker, just like support here did, right? 1, 2, 3, 4, 5, 6. You know, after the 6 touch is obviously going to break down. Then we broke out. We flipped it to support there. So here's the breakout. There's the flip of support. And look at that. You got yourself.
Oh.
Mom, I left you
Shut
for
up,
20
Leo.
seconds.
I just move quickly.
All right, you're muted. All right. So once that flip happened, right, that was your long. Stops probably below there, but you could have taken a tighter stop there. And there is your 5-hour trade, right? It probably comes back to support here again. It's already flipped to support. Let's see if we hold it. But again, now that we have actual data forming, okay, it's just going to be just like this, right? But it was a clean range to trade. You could have taken multiple trades from here. You know, I gave you 2, possibly 3 trades there. Gave you a 10%, 15% unleveraged. There's another one that gave you, what, another 5-hour trade there. Then you had a deviation reclaim, another trade there. Just by playing this range, yes, you're going to be stopped out a few times, but range trading has the cleanest R&R. You know, you're just gonna take profit mid-range and range highs, or if you're shorting range highs, take profit mid-range and range lows, and it's just clean. Losses will be minimal, and then your gains should outweigh. So you're not going to win 100% of these. It's going to give out one way or the other. Just know that the more touches of support or resistance, it's weaker it's going to be than on the next touch, and then right you have the breakout, and then you have the breakdown. Okay. This applies to all time frames, yeah. This was just the only reason I'm using a 5-minute time frame is because Injective broke its all-time highs, so I don't have high time frame data to go by over here, right? I can't tell you where the resistance is going to be, so we're just doing 5 minute. This is where that low time frame trading comes into play when you are trading a coin into price discovery, right? So let me answer some questions before I show more examples. I'm going to the front, one sec. So what is the difference between scalp versus swings? So scalps, your intention is to hold the trade anywhere from minutes to hours. Scalps can turn into swings. Swing trades, you're going into the trade on a higher time frame. So for me, anything on the 4 hour or higher, if I'm charting it, I consider a swing. Yes, I can turn those into scalps anytime, but my intention for swing trades is to hold them for hours to possibly days or longer. Okay, if I'm going into scalps, it's going to be anything on the 4 hour time, or on the anything below the 4 hour time frame, and my intention is to hold it for anywhere between 15 20 minutes to a couple hours. Leverage is irrelevant. It's all about position sizing. If you have a range formed in a coin that isn't forming new all-time highs, how do you identify the top and the bottom of the range? I'll show you that on a different example. Um, does this apply to Forex and commodities? Yep. You can do range trading on everything, especially on Forex. Forex is cleaner data. I don't trade Forex, but yeah, I don't scalp myself. But this was easy to trade. I personally did a whole bunch of trades. I don't share 5 minute time frame trade, so I'm giving you guys the information to do it on your own, especially on a coin with injective where this pumped literally in 20 minutes 10%. When a deviation occurs, how can we know that it won't be a breakout, or when a breakout happens, how do you know that it's a deviation? So yeah, just like Sesh said, right? So this deviation here, we broke down, right? We turned into resistance, right? But then we reclaimed it, closed above. Again, you could have longed here, easy stops. But I mean, if you had the risk tolerance, in this case, I wouldn't place my stop there. It's too long or too wide. I probably place it there, easy invalidation, and then you just play it to range highs. Nothing is guaranteed in crypto and Forex or whatever. It's just clean reclaim, close above, market long trigger, or if you have the patience, this is how I would do it: is close above, wait for the retest. This one didn't give it. It's because this coin's in price discovery, so it's going to keep going higher, right? But if I were to remove all of these levels and I go on, like, let's say the 2 hour, let's go actually on the 1 hour. Right? There's the breakout. Okay, let's see if this retest holds. Retest holds, touch the trend line, close above. You could possibly long, and then you go on a lower time frame to find your stops. Right? So if you were to long on that 1 hour close, we have to wait until 1 hour closes. So in this case, it's going to be 30 minutes, 39 minutes. Right? Stops would be somewhere probably there. Okay, and then this is more like a broadening wedge. So clean retest and go higher. I'm in on injective long at 28, down bad. Cut it loose or wait until it turns top of the range into support. Well, on the 1 hour, we swing failured, right? So that was, once this hourly closed below, that was the trigger to get out, in my opinion. Swing failure pattern. Is there a way to tell a range is getting weaker or about to break? The more touches of support and resistance, right? the range highs or the range lows is going to get weaker. High time frame AVAX from 2021 is a good example. I'll take a look at that. I have an example of Sol. I'll post that. Actually, let's take a look at Sol really quickly. Okay. So, all right. This was for those that follow me on Twitter. Okay. This was the Sol example that I gave, right? And I'm going to try to find it really quickly and post. Um, one sec. I'll post the chart. Actually, I'll link the. One sec. So I'll post this here. Copy message link. I'm also going to copy the image. You probably can't see that. I'll just copy the link. All right. All right. So check that out. This was the Sol range play that I gave. Okay. And this was what I had originally. Okay. You can actually hear support there. Right. So range highs, range lows, right? If I were to get this going, we have deviation, right? We flipped it to support, broke down, turned to resistance. We deviated back below. Here is your mid-range. Okay. Okay. So again, mid-range, the hardest area to trade. So whenever we have a range and we get into mid-range area, I typically stay out. I like to wait for the higher RR trades. So range highs and range lows. So if you were to go into range lows, right? So we long there, stop loss probably somewhere below there. Back to range highs, stop loss above, right? Now you can use confluence as well here. So for me, you can draw fibs, and just like that or the message link that I shared, right? I used the golden pocket and the 786 fib. The 786 fib and the golden pocket are the two highest, in my opinion, strongest reversal points, and that was what I gave my students in my class when trying to short this, right? And obviously the squiggle worked. So if I were to go into range highs, right, there's range lows, it filled, right? You're going to take profit at mid-range. Okay, once you take profit, you can move your stops up, or when we get back to range lows, you can add to your position, right? There is range highs, right? Short it. You got from here to there, 23% move. Range highs filled down to there, 8% move. Now you're waiting for the flip. We took it. Let me move this. Okay, we reclaimed range highs. That was a long trigger. You could have taken it once that closed above, stop loss below. Right, there you go. Again, once we reclaimed it, this became support, right? Another long area to take, and just by this, not only did you get 23% move, 8% move, that reclaim of range highs, and then support again. right? There was, in my opinion, once we broke out, no reason to short Sol. I was seeing a lot of people calling short Sol on Twitter and stuff like that. Why are you shorting when we just broke out of a range, especially a high time frame range? You're gonna wait until previous range highs is flipped to support to long again, and that's what happened. And I think we haven't gotten back there again, but 64, 20ish previous range highs is now support. Okay, so if you're taking a long there, your play would look something like that. Okay, let me read questions. Any questions on this? We had a deviation there. If you had taken it from once we made the range highs, right? This was your range lows. Then we had deviation there. We reclaimed, went higher, bounced from support, deviation again, reclaimed it, went higher, bounced from support. And for those that follow rect proof, this is a perfect example of a triple tap, right? Support, deviation, triple tap. Thoughts on currently TIA chart? I'll take a look at charts request later. I'm just going over the example here. Um, Tell us it was a good trade when it was no longer valid. What are you talking about? I gave this trade out. The short. Stop being a cunt. How do we make sure whether it's going to be a fake out or not? You won't know for sure. You just have to take the play. Like, we broke out, right? We reclaimed range highs. That was a long trigger, stops below. If you weren't comfortable waiting for that to happen, then you're going to wait for a successful retest or bid previous range highs, which we filled perfectly on that giant wick down, and you got a 12% move up. Okay. That's not an inverse head and shoulders because it broke the neckline in the first shoulder. Are you talking about this? No, that's not an inverse head and shoulders. Inverse head and shoulders is clean neckline. You can't have candles go above like that. If we didn't have this here, that would be an inverse head and shoulders. But for me, that's not head and shoulders or inverse head and shoulders. See how you say triple bottom there is it's bullish, but could it also show a sign of weak? Show as support being weaker. So yes, I mean you had two supports, right? You have this one here, which it was previously resistance. We broke out, right? This became an SR level. We bounced right from it, so you could play that. This one here, we've had the reclaim, right? Previous range lows, reclaim, one touch, deviation. Here's the second or the third touch. This is a by rect proof. This is a triple tap, right? But for me, once it's lost, and I know everyone has different ways of how to play this, right? Some people say like, hey, it's deviation, it's still support. Once support is lost and we reclaim it, the next support touch becomes the first or second touch, however you see it. So based on rect proof, one, right, sweep of liquidity, and then the third touch, for me, it's here's the first, we lost it, we reclaimed it there, there's the first, there's the second. But everyone has different ways of how to play it, right? So once this support was lost, and to be fair, It's lost when the candle closes below. Okay, wicks do not matter. I'm more of a spot trader, so these I'm not, super high degen with trades on leverage recently. I've just been playing spot, much more profitable. But this retested support closed above, that held, right? This closed below, we lost support, but we reclaimed it. We broke out, reclaimed support, retested it as well. Again, bounced from there too. This is support still. Yes, the reclaim gave it more strength, and the retest and close above also did too. Um, Triple tops, and I know this is a topic of discussion. Triple tops do not exist in bull markets. The support deviation support, is it a trend reverse signal? Because we also have resistance, deviation resistance as well. So here's range highs. We broke out, flipped it to support. Once we flipped it to support, we ran 5%, broke down, closed below. This became an SR level for my students, right? This was a place to bid, stops above there, and then you got it, right? This is deviation. Once we close down below, retest the previous resistance, which was range highs, stop somewhere above there, and your setup would have looked something like that. This was a trade that I gave in my class. Quadruple tops aren't a thing. Okay. Sesh said AVAX 2021. Oops. Are you talking about the weekly? This one here? What's your start date? Oh, I see. I mean, right now, similar to what AVAX had after it broke out, like this whole consolidation phase. I'm gonna go to the 3-day really quickly, just to get more condensed. Okay, broke down, range lows, range highs. Okay, deviation, we reclaimed it, went higher, bounced from support, went higher, lost it. This became resistance or an SR point, right? Came back down, reclaimed it, went higher, and we have just broken out of this huge range from May. If we get a retest point at previous range highs, that's a place to go long. But same with Link. Link just did this as well, right? Multi-week range, which was easy to play. One sec. Range highs. Here is your range lows. Right? Clean range. Imagine this is straight. Right? Range lows. Over and over again. Deviation. Reclaimed it. Went higher. This one never had a successful retest of previous range highs. Got close, but it didn't. I think the perp chart might have. Yeah. Perp chart did. Right? And that's another thing. When you're trading, make sure you're using the perp chart if you're trading futures and the spot chart if you're trading spot. Because look, this was range highs, right? Broke out, retested previous range highs, and then that was your trigger to long, right? Otherwise, you're just playing this range until broken. This was a multi-week range from May of 2020. Um, yeah, Rec Proof is a trader. He has a Telegram. Um, I can share his info. But yeah, I do see Sesh your AVAX. That was clean too. Deviation. Case study of the 25 break as well. 15.6 deviation. Yeah, so for me, yeah, deviations are whenever I see this, right, or whenever I see a deviation on the highs, I immediately get in. It's easy invalidation, right? Like you either long once it's reclaimed, or for those that are patient, you can wait for the retest to make sure it's turned to support. But once it's reclaimed, even if you longed on that weekly close, right, there is your invalidation level. Or you could have waited until retested. But look, can you wait? Like you got 40% move up, right, and then came back here. What, 1, 2, 3, 4? About like 12 weeks later. Do you guys have the patience for that? I do. I set bids and just wait. That's why spot trading is much better than leverage trading. But what is this? Almost a 6 hour trade? Yeah, Trader XO is good at deviations. Um, Let me see if I can. So TIA, new coin, price discovery. Let me see if we can find a range on that. It's gonna have to be a low time frame range, cause there's not much data on this coin. By the way, spot trade I gave yesterday was up 30% on TIA. So hopefully you guys bag some profits. Let's go. I don't think there's much data after this, but here was the previous high, right? Whenever a coin breaks its all-time highs, it just keeps going, okay? So, not saying that price is going to come back to it, but if it does, you have a demand zone here plus previous all-time highs. Great area to add that to your bags. Okay? So 7.45 level, you can front run it, but here was right range lows. I'm gonna add that to my favorites really quickly. Okay, so range highs, range lows, right, and then your mid range. Okay, short highs, long lows, deviation, right, lows, highs, and then break out, retest previous range highs, continue to run, support, right, deviation, reclaim range highs, run, bounce, right, reclaim range highs, run, nasty wick, swing failure pattern, grabbed the liquidity, closed above, right? This is still support. We just had a wick down to grab the liquidity and then continue to run higher, right? So here is a 5-minute. Range isn't clear here. We're just making, higher highs, higher lows. So no clear range here. How do I find the stop loss for range highs and range lows? So if you were trading this range here, right? Again, this coin's in price discovery, so I don't have data back here to tell me where to place it. You'd have to use fibs. And this one's hard because even with fibs, right, like it's pretty wide, right? So if you had shorted there, give yourself some breathing room, maybe like a 2%. But this one, right, this is support. You have to go on a lower time frame. Since I have data down here, it's easy. So let's go to like the 5-minute. Right? Here's support. Well, 5-minute support's here, right? Place your stops below the wick there. Go back on the 30-minute. Right? So it's 4%. You could go on a 1-minute time frame if you want. Try to find support somewhere here. Make sure it's definitely below this because we had a swing failure here, right? Grab the liquidity and then ran it. So again, now this part's hard, right? Like if you had, this one was easy. If you tried to short range highs again here, right? Stop loss was above this wick. You'd have been stopped out. Okay. Once we close down below, turn it into resistance. You could have shorted with your stops above the high. Got to move down, right? If you shorted here again, stops above the high. This high, right? You could have longed down there, stops probably below the wick here. Or if you have a little bit more risk tolerant, you can just give yourself some more breathing room. Okay, reclaimed range highs. Stops probably somewhere here. Right here, support, somewhere below there. You wouldn't place it below this wick because the R&R there sucks. So once we broke out, flipped it to support, there it was, stops below there. Same thing here, filled, right? Then you would have been stopped out, but once we reclaimed, you would have longed, stops. If you want tight stops below there, or if you want to give yourself some more breathing room, there with lower position sizing, or here. There's no other exchange for more data on this coin. This coin's new, so it's in price discovery. But yes, you should open up the spot chart first. See, there's no other. This coin's in price discovery. How do we differentiate fake outs and deviations, or are they related? Deviation is just a breakdown of support. So, and so here, right, we broke out from previous range highs, right? We reclaimed it, retested it, got a nice bounce, but once we closed down below and turned to resistance, that's a deviation. Same thing if it was to go the other way, right? Break down, turn into resistance, right? We've turned it, and then once we reclaim it, that's a deviation. Um, what was the first coin I charted injective? So like broke down, right? Deviation once we broke down, closed below. Okay, it rejected it briefly, but once we reclaimed it, it was a clean deviation. So you need the candle to close down below previous support, and then once we reclaim it, usually it like consolidates here. You could have just a wick down and then another candle that just comes. It could be two consecutive candles back to back, but usually it's going to be like a few candles like that. Now, if I were to extend this a little bit more, right here, broke down, closed below, retested it, right? Turned into resistance, closed down below, right? This is already resistance because we closed below and rejected from it. So this is another resistance touch. Broke down, got a nice like what 2%, 3% move, and then deviation once we broke out and closed back above the support line. Why spot chart first other than more detailed? Okay, well, here. Go to injective. And for example, on Bitcoin and Sol, you don't have to do that. But look, here is injective. Data starts from August 22. Okay, this is Binance or Bybit. Okay, here is injective spot. Data starts from October 20th. Right? If you or whoever didn't see that and you randomly shorted $25 yesterday, you would have gotten destroyed because you would have known that 25.25 was previous all-time highs. Once we broke that, we went higher. Okay? And a lot of people like to short things just because they're going up for no apparent reason, or like to long things just because they're going down with no apparent reason. You need support, resistance, and whatever trading method, you supply demand, right? Fibs. You can't just short and long blindly. Will there be a class on how to risk? That's not mine. I don't care. When setting range highs, lows, do we take into account the wicks or where the candles close? Um, Typically for me, wicks, but so if we were to go back onto here, here was a clean. I don't know why I keep doing that. Here's the highs. Here's the lows. Okay, first high, first low. Deviation. Range highs, rejection. Long range lows. Deviation again, right? Probably bounced somewhere from mid-range. Okay, broke out, flipped previous range highs into support, and then just skyrocketed. So I use wicks. But if the wick closes down below, like for example, these wicks closed, the wicks went above, right? But the candle closed below. So this previous range high is resistance. Same thing here. You had a little barcode, right? It broke out, flipped it to support, ran, broke down, closed below, right? So if you were taking a short there because the deviation, whoops, stops above, right? Came back down, longed here, shorted range highs, stops. Now here, stops are going to be, if you have the risk tolerance there, lower position sizing, I like to see how it goes. So for me, if I was taking this on a leverage long, I go in very light. I wouldn't DCA. If we were to reclaim previous range highs as support, I would close my trade manually and enter back down on a deviation. Or for those that set limits, you could have set limits there, maybe a DCA and stops above here. But when you have a range trade, for me, it's more manual. So deviation is sort of a false breakout. Um, I wouldn't call it a false breakout. It's just a loss of temporary um, support, or a break of temporary resistance and then close back below. A false breakout is if you have a bull flag, for example. Let's just say like that's a bull flag, right? And then you have price action, and then you have a wick, just a wick, and then the candle closes back down here. That's a false breakout. What is the best time frame to find the range, and how many times should the resistance level hold to be considered range low? You can use any time frame. The weaker the time frame you guys are trading on, the weaker the data is going to be. The only reason I went on 5-minute time frames on like TIA and Injective is because they were both in price discovery, so I had no data to go off of. But typically, I'm a high time frame trader, so if I'm taking swings based on ranges, I chart them on the 4-hour or the daily. You could do any time frame, but again, the weaker the time frame or the lower the time frame, the weaker the data. Do you ever Cake is a shitcoin. Do you ever use line instead of normal wicks? What do you mean line? Like line chart? Like this? No, I do not. These don't show wicks. So this won't tell you where liquidity is. It just tells you what the candles close. So if you were doing this and if you were to short here with your stop loss above there, and you go back to candles, you were fucked. Don't use line chart. Is there a set number of times support resistance needs to be touched before it gets risky to play? So for me, anything after the third touch, I typically don't get into it. Um, Obviously, if it goes, 5 or 6 or 7, I definitely stay away from it. But um, when I get into trades, I like to get into the second or third touch. Um, the fourth and fifth. So when you have consolidation very tightly like this, right? And you have, let's say this was a daily chart, right? If you have consolidation on a very strong coin that's not showing any weakness, okay, the third touch might just be it. Like you shouldn't short a third touch of resistance unless you have more confluence, right? Like if it swing failures, also deviates, then you could get into it. But if you have just tight consolidation, a very tight range, and it's just consolidating, and Bitcoin's going down, or Bitcoin's not doing anything, and this is just staying very subtle and not moving, don't short it. Just wait for a flip of the range highs into support and then long it. or just wait for range lows, or if you're, a mid-range trader, set levels at mid-range and wait for that. I swing trade on the 4-hour time frame or higher. But you can also, start a scalp trade on the 15-minute, and then all of a sudden you're like, hey, this shit's gonna go much higher, and then you can turn that 15-minute scalp into a swing trade, or vice versa. Turn a 4-hour swing trade into a scalp. But again, when you go into a trade, you have the mindset that, hey, you're going to hold this out for however long that you're holding a trade for. So just don't panic, right? Like if you're going into it with the mindset, hey, I'm gonna hold this until TP 1 and 2, then you're gonna stick to your plan. You're gonna set your stop loss and you're gonna take profit at TP 1 and TP 2, right? Does that count for the women you go after? No more than 3 is a go. I don't go on a date after the first. I don't. They only get one date. One night stand type of guy. I'm not looking to bake. I don't chart shitcoins. Is this range correct? Yep. Your top one though should have been at the top wick. It actually retested it perfectly. Isolate that audio played at his wedding. Yeah. So, when I teach my class on my techniques of supply, demand, and support resistance, we look for confluence within a range, right? So when I showed you guys that Sol example, fuck Binance, one sec. Okay, when we looked at Sol, not only did I short Sol based off range highs, but I also shorted Sol based off supply and demand, right? So here was the range highs, right? Here was another order block. So when I gave the students the short, came back down, rejected from the order block, used that as confluence, stops above there, had a huge move down, right? Long the range lows, shorted the 4-hour order block, right? And got a nice 8% move down. So I use everything for confluence, okay? Not only did this reject because we closed below, right? So yes, you can have the wicks, it's where the candles close. Took out liquidity. We took out this high, swing failured into a 4-hour OB, came back down. So not only did I have range highs, I had swing failure, I had 4-hour order block, I had 3 confluences for this trade, and then down, you could have added more to your position there, and you got a nice 8% move down. I remember in one of your videos you mentioned top-down levels where you plot SR levels on higher time frames and then to lower time frames. If at a level a supply of demand zone forms between a higher time frame or lower time frame level, where would you place trades in lower TPs? That's a whole different lesson. I can't get into that right now. I gotta head out soon. I probably went through top-down analysis in one of my videos. Just have to find it. Could you share us how you identify the term shitcoins? So I only trade high time frame coins, or sorry, high market cap coins. Anything in the top 30 or 50 usually. If something is a liquid, like I'm not gonna touch coins that are named after Barbie's dream house, right? Like cake and bake. What the fuck? Absolutely not. Um, I trade coins that have liquidity. Like, for example, Injective, with how illiquid it is, with these wicks. When you see wicks like that, you know that the coin in the perp chart is liquid. Stick to spot charts on those. Okay? How do you know where the order block is? Hey, so I don't use volume profile. I use no indicators whatsoever. My definition of an order block may be different from other people's, but an order block for me, let's go back to Sol. Okay, so a bullish versus bearish order block. I'm going to make these cyan colored because I use red. Okay, so a bullish order block is the last red candle before a directional change in price. So once we had this move down, this was the last red candle before we had an uptrend, right? We went as high and then came back down and filled it. And a bearish order block is the last green candle before a directional change in price. Here's the last green candle before we went down, right? And then we came back up, rejected from it. But I always use order blocks with confluence of support and resistance. I know a lot of people have different definitions of order blocks. This is just what I was taught, what I learned myself. So I use that definition when I share. Is it valid to use a more math-based technique of identifying support resistance? For example, 3. You lost me with that. Keep it simple. Just find support and resistance based off candles. So here is previous rejection, broke out, flipped it to support, right? Again, support touches, support there. That's it. Simple. This isn't a 5th grade algebra class. Sol. Um, what is your support? These are, if you're taking a look at 1 hour charts. Broke out, flipped it to support, right? Yes, we had this wick, but every chart had this wick. There's no way of stopping it. But look, we bounced from support, deviation, broke out, flipped it to support again, broke down. Now we're possibly trying to reclaim the support here. We're actually hovering on support. So this is getting weaker and weaker. 1, 2, broke down. 1, 2, yeah. This is getting weaker. We're putting in, right, lower highs and lower lows. Here's the last higher high, lower low, lower high, lower low, lower high, lower low. Maybe we go back up to make another lower high and then come back down. Maybe. 1 hour order block confluence with another downtrend rejection. You have SR line here. Maybe something like that. You think this dump is over, or do you think we will go even lower before we move up in the market? I think, personally, I think we go to test 38K levels in the 38s. Right? Previous range highs, we broke out, flipped it on the day. On the daily, we haven't flipped it to support. Right? We just broke out. On the 4-hour, we have. Okay? We also have demand zone. Right? We have multiple, but this is an area that needs to hold, in my opinion. I'm going to make that gray. Okay? But looking at that demand zone, right? We had a swing failure there, right? That was your market long. Here is your range. Okay. We made, here was the last higher high, higher low, higher high. We made a lower low. Maybe we go back up and make another lower high, maybe test the range highs again. But for me to be bullish, we need to reclaim this to go higher. Okay, otherwise, this is your range. Okay, so maybe we go back up to like 42.4 with maybe a wick to about right. This would be the clean. Hey, I'm going to max long. For me, this one would start us off, but we can still reject from here and make another lower high. Right. How to identify a supply and demand zone? I have a 2-hour video on my YouTube video that explains how I trade them. Otherwise, I teach that solely in my class. I actually done a supply and demand zone video or stream here in Unity as well. It's also on my YouTube channel. Okay, so this is the range that you guys should be focusing on right now, right? So rect proofs, triple tap, range lows, sweep of range lows. We may get another touch of range lows again before a simple setup. And again, this is rect proof. You can look him up on Twitter or follow him on Telegram. He has a free Telegram. He goes over his trading ideas there, but he uses that triple tap setup a lot, and it does work. It works on both, the bullish side and also the supply distribution side. Which stream? This stream will be uploaded once I finish here. All right. So that's it for me, guys. I'm gonna head out, but I will upload this as soon as this class is over.